Every time you ask an AI to generate an image or write code, a power meter somewhere is spinning at record speeds. By 2030, AI data centers are projected to consume more than 1,000 terawatt hours of electricity. That's nearly triple their 2024 levels. We are facing a massive energy bottleneck that solar and wind alone cannot fix. But a pocket-sized nuclear revolution is brewing. Today, we're analyzing why big tech is betting billions on small modular reactors, or SMRs, and whether stocks like NuScale and Oklo are revolutionary investments or speculative bubbles.
The numbers are staggering. Goldman Sachs and the IEA have highlighted that AI's energy density is far higher than traditional cloud computing. A single ChatGPT query requires nearly 10 times as much electricity as a Google search. Tech giants like Amazon, Microsoft, and Oracle are no longer just software companies. They've become energy hunters. They need baseload power, energy that is carbon-free, but unlike solar, stays on 24/7. This is where nuclear energy, specifically small modular reactors, enters the chat.
So, what is an SMR? Think of it as a factory-built, plug-and-play nuclear plant. Traditional reactors are massive, custom-built projects that take decades and tens of billions to complete. SMRs are designed to be smaller, safer, and faster to deploy. They can be placed directly next to data centers, bypassing the aging and congested national power grids that are currently blocking AI expansion. Let's start with the veteran, NuScale Power. NuScale has a massive competitive advantage. It is currently the only SMR technology with NRC design certification. They aren't just drawing on napkins. They have 12 modules already in production through their partner, Doosan Enerbility. However, the financials require caution. NuScale's 2025 revenue declined to $31.5 million from $37 million the previous year. This is a company in a transition phase. While they hold a strong liquidity position with $1.25 billion in cash and zero debt, their operating margins are deeply negative at over 2,000%. The bull case for NuScale rests on their 6-gigawatt program with TVA and Entra1. If they hit their milestones, they are the safe play because their tech is already regulated. But with an analyst EPS estimate of minus 56 cents for 2026, the market is still waiting for a clear path to profitability.
Now, let's talk about the market favorite, Oklo Inc. Oklo currently carries an $11.6 billion market cap, nearly triple that of NuScale, despite having no NRC-certified design yet. Why the premium? 2 words, Sam Altman and Meta. Oklo's partnership with Meta for a 1.2 gigawatt campus in Ohio is a game changer. They are also vertically integrating, meaning they plan to handle the fuel fabrication and recycling themselves. Financially, Oklo is aggressive. They just completed a $1.5 billion ATM program, bringing their cash pile to $1.23 billion. But look at the burn rate. Oklo expects to spend between $350 million and $450 million in CapEx during 2026 alone. Unlike NuScale, Oklo uses fast fission technology, which allows them to use recycled nuclear waste, but this adds a layer of regulatory complexity. Their first powerhouse, Aurora INL, isn't expected until 2028. You are paying a huge innovation premium for a company that is still years away from its first dollar of energy revenue.
Comparing the two, NuScale is the regulatory leader with a $3.7 billion valuation. Oklo is the tech/AI darling with an $11.6 billion valuation. For 2027, analysts expect both companies to remain in the red, with NuScale's EPS projected at minus 44 cents and Oklo at minus 84 cents. The fair value here isn't found in current PE ratios, which are non-existent, but in the price to sales and cash runway. NuScale is trading at a price to book of 1.77, which is relatively grounded for a high-growth tech play. Oklo, with a price to book of 6.6, is priced for absolute perfection. Any regulatory delay from the NRC for Oklo could result in a massive share price correction.
What is the projection? The SMR sector is currently in its infrastructure build-out phase. We expect 2026 and 2027 to be dominated by permit news rather than earnings news. The real inflection point is 2028. That is when Oklo's first commercial deployment is scheduled and when NuScale's Voyager plants should begin showing significant milestone payments. If you are investing today, you are not buying an energy company. You are buying a 5 to 10-year call option on the survival of AI. The risk? High cash burn could lead to further share dilution before these plants are even turned on. My take? Keep these on a watch list. Watch the cash burn versus cash position and wait for the regulatory de-risking before going all in.
SMRs are the only logical solution to the AI energy crisis, but logic doesn't always prevent market bubbles. Between NuScale's proven design and Oklo's high-profile backing, the sector is at a crossroads. Which one do you trust more with your capital? The certified veteran or the AI-integrated newcomer? Let's discuss in the comments.